Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, the 22nd of March, 2022. You know, there are times when I look at these markets, I think I'm a beginner. And, you scratch your head, what the heck is going on? What I'm not a beginner with is we have my What's Up live webinar taking place this coming Thursday. And when it goes, make a long story short, I started at 12:15 in the afternoon. I open it, 12:30 I begin it. That's when I start taking your questions, talking to you, and we go until 12:20. We cover spider stocks, futures markets. Can't make it any easier than that, right? The ETF's in there. You can join on anything, be it your phone, your desktop, your computer. It's very fast. I ask you to write me questions now that you want me to cover, but write me at my email. Don't write me on YouTube, Facebook. That's not where I'm going to answer them from. You register for the webinar. Inside of your receipt when you register, because you're going to get a user ID and password, is a line with my email address. I say, click here, put in the markets you want me to cover, and I'll do them from there. It comes right to me. If you have questions, 866-973-2077. I'm sure some of you have one question. Ira, how do I get the invite? Real simple. If you didn't get it in your inbox already, it means that you're not in my mailing list. Just take your cursor right now, push it up here. You'll see the icon appear. It's all magic. Fill everything out, and away you go. You'll get the info. I said at the beginning, you feel like a beginner sometimes in these markets because war environments and inflation environments all at one time are unique. Extremely so. President Biden is leaving now for Europe again. You're going to hear him go with NATO. They're going to come up with more sanctions on Russia. Unlike the Trump administration, Biden tells Putin everything that he wants to do or will do. NATO's doing the same. So they're warning already Russia that if any NATO member is attacked by a cyber attack, and they suspect it's from Russia, collectively they will respond. It won't be military. Therefore, Putin knows if he goes ahead and does this, the military's not getting involved. I don't think that's ever smart. I don't think you tell your enemies what you're going to do or not what you're going to do. I never understood that type of thinking. But it's what it is. It's like, hey, at 1 o'clock I'll be in the ballpark. You show up, I'm going to beat you up. I'm not going. I'm going somewhere else. I'll go to a soccer park somewhere. All right. So you look at the markets and you try to figure out what this is all about. And in the stock market, we've been coming up and we're right in the key resistance. Be sure to watch my financial market wrap up tonight. You'll see what I'm saying. In the metal markets, we have been getting a correction. So on a closing basis of charts, weeks, the highest we recently had was 1985, and that was the week of March 11th. We then simmered back down 2.8% last week, and we're down another 0.5%. We're certainly not falling apart. You're down 3% off the top of the market, and it's always good to see that, to take it into account. Now, if it collapses here, I'd look for support at 1847, which is the 18-day average of closes, and that's still $60 away. When you take a look at a chart of June gold, you can see your spike up off the war, and boy, you've given everything back since then. Very interesting time in it. The trend is down. I can't believe I'm saying it, but the trend is down. You have lower lows, lower highs. Any way I cut it, it's down. Where does the market keep failing? Just what I tell you each time, the line in the sand, that 18-day moving average of closes. The 100-day is here, the 200-day. If you break down from here, then I think you go to one of those averages or the closer of a Bollinger Band, and here's the Bollinger Band. So it's above those numbers. So 1882.40, very much in play if the market breaks down. What turns the market bullish? Because this pattern can turn bullish like that. Just getting over 1955.60 does the job. Initially. That would give you the higher lows, higher high, but you need to settle over that because at the same time, that is the 18-day average of closes. So that's where the bears will show up. If the market gets them, anybody running on the downside here, the longs bailing in and new short sales, 1882.40. Now certainly if we woke up one morning and we heard that there was peace or some way to arrive at peace in the Ukraine quickly, gold would let go to the downside, in my opinion. And then we'd have to wait and let gold come back off the inflation argument. So you have a two-prong event that could set the market. One prong, setting it down, would be peace. So far, the ongoing war, you've had your run-up off that. Now gold's got to bite into the inflation story, which so far I think this pullback shows that it just quite hasn't done. The other thing that's going on is maybe the market's saying the Fed is that credible, and it can raise interest rates and do the delicate dance of not putting the U.S. into a recession. I don't know. I don't think anybody knows. You know, there's been some times where this occurred. I think out of the last 16 times that we've seen this, where the Fed turned on the rate hike policy, I think out of 16, 13 times they went into a recession. That's a lot. So the odds don't favor them doing that dance all that well, but 3 times it succeeded, so you got to be careful. You're oversold in gold, so as a chartist, trend down, but oversold, nah, I put my hands in my pocket, I walk away from it. Now, for the first time in a while, we're seeing that silver's starting to lose to the gold market. It got over that, and you can see tonight it hasn't pulled back in any quick manner. So it's losing to it, and silver, like gold, has said, hey, I'm going to join the bear camp. So what you have is lower high, lower low. If the market wants to pursue this downside, even though it's oversold, target the combination of the lower Bollinger Band and the 200-day moving average. That's the power number. What would catch the bears? Always got to have the other game. I'm of the opinion if you just got up to one tick over today's high of 25.59, the market would then begin a run trying to culminate that at the upper Bollinger Band. I'd be wrong in my thinking if you got up there and then you broke through today's low, but it would first have to break over that number. If you just get under today's low, then I'm not saying that is the case at this point. I'm friendly copper, bullish copper. Why not? The market's you're over the 18-day average. You got the higher high, higher low pattern. I think the trade will be a nibbler. I want to use that word very carefully, at 466 and a quarter. I think if you get under 465, 60, they'll go, okay, I didn't have dinner. I took a nibble. It's not good for me. If that holds, maybe you get back into the 488 level in the market. I don't see anything that can turn the market bearish. I see how you can stop the uptrend, and I'm not looking for that. In the platinum, you're in a downtrend, but it's awful far down. You're already oversold. You're approaching your first support that has held the market before in the 100-day average of closes. Okay, I don't think the smart money's getting too aggressive here, but it is fascinating that the two metals that Russia really exports a lot of, platinum and palladium, aren't able to pick up and run. This market has been under the 18-day average now for about, a week and a half? Unable to get anything going. You need to get back over the 18-day average to at least get the bias up. Right now, the pattern is one of higher lows, and for the moment, higher highs. So any close over 26.48.40, not taking out right here this low of 24.59.50 would be bullish. Got to wait. Is there a reason to go short? Well, when you're that oversold, I'm telling you, it's a filter. I say no. That doesn't mean it's a chartist. The chart can't get into a downtrend and make it a run for that. Absolutely. Is there a reason to be long without the method that I've shown you? I don't see one. That doesn't mean I'm right. In the dollar index, the battleground is crystal clear. It's the 18-day average of closes. And I do think that the professionals are buying the 18-day average, but I think if you got under 98.16 and you're at 98.52, that would be reason enough to go to the sideline. Barring that, I think the market's trying to grind higher and see if it can put anything together. So you put this all together, you scratch your head, what the heck is going on? You have to be watching the news. You have to understand all the threats that are going on and the bloodshed and the human sorrow that's going on in Ukraine. We'll be there talking about all this come Thursday. Remember again, to get into my webinar, if you haven't received my invite, it means you're not on my mailing list, just take your cursor, move it up, you'll see the icon appear, and what do you do with that? Fill it out. You'll get the response with your user ID password. Write me the questions of the markets you want me to cover, and we'll see you then. Take care.